Yes.
Yep.
Fantastic. Okay, guys, well, welcome to our class on the Los Angeles market update for the, what are we doing for the second quarter? Is that what we're finishing up?
Mostly from up until July 2021 compared to last year.
Okay, so July. Perfect. And I am Samantha Shue with Movement Mortgage. I'm a loan officer here. I'm in one of the top 5% in the country. I own my own house and looking to purchase an investment property in the next couple of years. Obviously love my girls. They're 7 and 10 years old, just started school yesterday, and Belgian waffles almost as much. And my vision for the world is positivity and gratitude. So grateful you guys are all here. And I have Shannon. Shannon, do you want to introduce yourself?
Yeah. Hi, my name's Shannon Shue. I'm a real estate agent here in Los Angeles. I'm in the top 1% of KW agents across the country. I do a pretty decent clip of business. I own 9 units. I will have a 10th unit by the end of the week because my ADU at my home in Leimert Park is going to be finished. Thank goodness.
Yay!
Yay. And I'm currently in a 1031 exchange. I'm looking at self-storage and mobile home parks. My vision, I love Vietnamese spring rolls, and my vision for the world is connection and vulnerability.
Thank you so much. I'm going to go ahead and move forward here. So today we're going to be talking about the inventory so far this year up through the end of July, the conditions that we're working with, and they are starting to change a little bit. Different in the market right now between single families and condos. And then finally, we'll talk about financing and next steps, specifically targeting investment properties. All right, so before we do that, we'll just go around the room. I know Neil was talking with us a few minutes ago, but not everybody knows Neil. So do you want to go first and let us know, Neil, a little bit about you, what you would like to learn today?
Yeah, Neil Sweda. I'm retired, and I'm basically just, I like to come into this meeting and try to see what's going on with the market. And I've learned a lot of stuff as far as how to value properties and income flows and fixing things up. So I just keep coming in here and learning more stuff. That's it.
Well, we love having you. Helena, you introduced yourself a little bit before, but you want to tell us maybe what agency you're with and what you want to learn today?
Yeah, I'm a realtor with Douglas Elliman. I own a duplex. I am looking to finance my next property. I have some obstacles in that both myself and my partner are freelance. And I also like Vietnamese spring rolls, both fried and not fried. And my vision for myself is to walk around when I'm really old and look at all my buildings.
Nice.
That's what my old landlady used to do. She's like 100 and she used to just walk down, look at all her properties, walk by every day. So that's my goal.
Like a big game of Monopoly, right? That's mine, that's mine, that's mine.
Yeah, it was adorable. I mean, she was so adorable.
Oh yes, and proud, I'm sure.
Yeah.
Andrew, you're next.
Oh, hi, my name is Andrew. I am semi-retired. I'm just doing some consulting work here and there. I have been a real estate investor for the last 10 years or so, and trying to get rid of a few of my properties. So I'm just trying to come here to learn about the market and just try to understand everybody else's perspective on the market recently.
Great, pleasure to meet you, Andrew. I'm glad you came. Yeah.
So all of you have owned property. This is more for like a first-time home buyer. Why do people buy property? Obviously for retirement, passive income, like Helena was talking about, tax benefits, stabilizing your housing payment. Helena, do you live in your 2-unit right now?
Yeah, I live in one of them.
Great, great. And you know, when is a good time to buy? I always like to have this slide in here because, you know, Shannon and I always get these questions like, is it a good time right now? And shouldn't I wait till it hits the bottom? Shannon, what's your take on that?
I always say the best time to buy is when you have the money. because no one can time the market. And especially now, we are in a very hot market, but we still can't time it. So it's more a matter of when you're ready and you see the thing that makes sense cash flow wise, and you see the property that makes sense financially, go after it. And if you think you see something that's great and something better will come along, then just pass on that. And then you'll wait for what you may believe is something better down the road.
Okay, so Shannon, take it away on what's going on. What's going on right now?
Sure. So housing demand is through the roof. What a surprise. We've been seeing that on the news all the time. I took a snapshot of Southern California, just up until July 2021. And our home prices here in the Southern California area are averaging $760,000. And keep in mind that's aggregated against like Riverside, San Bernardino, some of the inner counties, and plus here, Orange County, Ventura, San Diego, all have very high price points. We still have less than a 2-month inventory. So a balanced market is 6 months. So the unsold inventory index being under 2 months, we still don't have enough inventory to meet the number of buyers in the market. We are looking at 8 days on the market and a home is going to be sold. So that's the median, of course. Things are selling so quickly. And sales price to list price ratio, this is, I mean, an all-time high at 103.6% above average. So yeah, even I'm noticing the median days on market. I have 2 listings on the market right now and they're selling. I have one with 21 offers on it. The other one has 3 offers on it in less than, I haven't even been on the market for 5 days. 5 days for one and 4 days for the other. So
I think it obviously always depends on what it's listed at, right? And so how much activity you're going to get also is like, oh yeah, that place is way over market. No one's ever going to pay for that. And so they don't get any they don't get any offers. But if you price it really well, like Shannon has hers, you're going to get a lot of bites.
yeah,
And a lot of competition for those buyers.
for sure. So I just mentioned this earlier to Neil because he was here a few minutes early, and I think that there is a slight change happening in the marketplace. Sales are showing the first dip in 12 months as we begin to compare the strong months in second half to that of last year at the same time. So if you look at the chart, you can see as soon as the pandemic hit, the market just dropped, right? But it didn't stay down for very long. It rebounded so quickly. By the end of summer last year, it rebounded, and then it just continues to move upward. And then just this past month, July, and I'm seeing it in August too, seeing a slowdown. So still have buyers, still have listings out there, but we're seeing not such a spike up in the amount of inventory and then how quickly things are selling. So I gave this example. Instead of seeing 12 offers, I'm seeing 7 offers. Instead of 7 offers, seeing 4. Instead of 4, I see 1. So I opened on backup offer for 2 offers in July. So we were in backup, and backup hadn't worked as of yet all year, and backup worked. And then now I have clients right now also who are being single countered, and then we just sign it and we'll open escrow. So it's kind of nice when I actually think the home is priced $150,000 below what it's worth, and we're not giving them $150,000 increase over their list price. So that's the change I'm seeing.
What was that property listed at, Shannon?
The property was listed for 1.2 million. I thought it was worth about 1.35, maybe 1.33. And we're waiting for a counter at 1.3. So then we're the only offer on the table, but they've shown it a lot. So I don't think that there's a lack of interest. So this was interesting for me when I saw this. I noticed that the higher end homes, mostly things above 750, are growing in the gains of selling. So you can see in this mint colored July 2021 year to date change, in the price points, 26% is between 750 and $1 million. So, I mean, that there's a lot of purchases happening there. 32% and 50%. Those are really, I mean, that's $1 million to $2 million homes and 2 million plus homes. The lower end, of course, for Los Angeles is a lot harder to really calculate here, but we're aggregating the whole state of California. The reason it's a little harder to aggregate is because here we don't have homes under 650 is very difficult to find. So we don't have a lot of inventory there. Therefore, but I still think the higher end homes, they are fetching a really pretty penny. So, and then share by price segments, you can see the change. Be 500,000 to $1 million, it's 44%. Homes are being sold in that price point versus 40 last year. $1 million plus is 29% versus 29 versus 20% last year. I believe this is explained because all of these folks that had good jobs that were gonna probably buy a home anyway saved a lot of money during the pandemic. No traveling, very little going out to eat, very little things to spend money on, and you know, except for grocery shopping, even getting rid of like things like their childcare, not even putting gas in their car very much. So all of these folks, everybody has more money, so now they've all pushed up in their price point. So
is the green graph, Shannon, saying that $2 million homes are going for 50% more last year to this year?
There's 50% more buyers in that category
Buyers,
than there were
okay.
last year. So last year they had 50% less than that, 50% less than that in that price category. So that tells me those buyers are increased their buying power across all of the affordability indexes, really, if you think about for Los Angeles. But again, it's a statewide amount of information here. So then I'm saying that not all price ranges are moderately slowing though. So I do see the price ranges slowing down. So you can see these curves, it's broken out by price range. I really think the only meaningful ones are 750 and above, because below that, it's really just difficult to find a home at that price, but it is aggregated, like I said, across the state. The blue line is those people between $1 and $2 million buyers. A year ago, $1 or $2 million buyers could have bought a much different home than they could today, which tells you a lot about how this market cranking, low interest rates, not a lot of inventory, people have money, people want to spend it on more than just a nice vacation. They're like, let's buy a house. We need more yard space. We need a bigger house. We need lots of things that a pandemic stuck home with the kids or a pandemic stuck home working with two people cannot provide. So I actually think this trend is going to kind of continue to slowly tick down, by the way. Like, we don't see any more of the graph because we're only in August. So I do think it will slowly start to tick downward. Slowly though, we're not looking at a crash. I don't predict a crash. You guys can ask me about that later. So all price ranges are moderately slowing. Pending sales right now, so say homes that are under contract and in escrow have declined by double digits for the second consecutive month, which means it started ticking down in June. I did see this tick down in July. The fact that I got 2 of my backup offers accepted for buyers that had made a lot of offers elsewhere. And also in July, I opened escrow for someone who I thought the home was, again, aggressively priced. We came in 20,000 above asking, and it didn't appraise, and the seller just brought the price down to the 15,000. They brought it down 15,000, no negotiating, because they didn't have a backup offer. So it's like, well, we're not going to give you that much money. You don't have a backup offer. We'd like you to reduce the price. We don't want to negotiate. They said yes.
Sorry.
Yeah. So yeah, I keep in mind the 15.9% pending sales declining. I do think this is some opportunity here, But as soon as it declines, a lot of times, and we don't have a lot of inventory, buyers figure that out, and then we swing back up again. So if you're thinking to yourself like, oh, I better get in now, or I'm going to wait for it to go down more, I actually think it's going to swing up. Not maybe to March levels that we were in just a few months ago, but the swing is going to come because I have enough buyers with money and investors, and I'm an investor myself. I'm in a 1031 exchange myself. I want to get in the market. I'm not waiting for the quote, the decline. I want to swing back in. Next. So we still are keep in mind, we're still 7 out of 10 homes are selling above asking. So it's like 70.6% of homes do sell above the asking price. So that if an overpriced listing is on the market, it's going to sit. So 1/3 of inventory, I believe, is just sitting because they want too much and no buyer is going to give them that. And then the rest of it is just flying off the shelf. And what we hear on the news is only the 70.6%. And we begin to believe there's a frenzy. And then we begin to believe like maybe the market's not for me, or I don't want to participate in such chaos and such like there isn't enough and like gotta have it. But keep in mind there's 1/3 of inventory you could put a bid on. It's overpriced and doesn't seem that the seller wants to take a lower price. So then you're back to square one. You're still looking for that right property.
Or maybe hoping you find the seller on a good day. Where okay, fine, just take it.
Right. You can, time's the other thing on your side when sellers have been on the market for more than 30 days. It's like, if you haven't had a price reduction, it's time to have a real heart-to-heart conversation about what you're going to get for your home. Inventory still remains low. We're even lower at inventory today than we were before the pandemic. So if you're wondering what explains this and what explains why there's this frenzy and why there's people that have more money, interest rates are lower and there's not enough inventory. We have less inventory than we did before the pandemic. So that's all that trifecta right there creates this shortage and creates this boom.
Well, that was all that we had from Shannon. Do you guys have any questions specifically about the market right now before we go into the financing stuff? All right, well, we'll cover it at the end again then.
Yeah.
So what are investors doing right now? So here are some couple things that my clients are doing from a financing point of view. If you're looking to purchase a duplex, I think that if you have the ability to live in one unit and rent out the other, then you can use the FHA loan program where you only put 3.5% down. And so long as you rent out the other side, you're good to go. And that way you can then use the rest of your money you might have for buying other property or renovating the second side and then moving into that one, renovating the other one, and then selling it for a lot more money. FHA is great for duplexes. And then otherwise, if you're truly buying a house as an investment property, you're going to want to put roughly 15 to 20% down. If you're buying a triplex or fourplex, you're going to need to put 25% down as an investment property. And a couple of months ago, Fannie Mae and Freddie Mac have put some pretty high cost add-ons for investment properties. So don't be surprised, since many of you on the call here are looking to purchase investment properties. If you're looking for financing, don't be surprised if the rates have jumped so much for you from when you may have looked at it last. So investment properties now all have points and they're all going for, high 3s, low 4s, and maybe even more. So that's just because I think right now Fannie and Freddie are saying, there's such a low inventory, like Shannon was saying, we have to make these properties maybe not as appealing to investors, and maybe those first-time home buyers would have a chance on paying for that property, and that investor may say, you know what, the rate is too high for me right now, I'm going to wait. So just something good to know what's happening right now. So I actually just covered this already. So rates are about 0.5% to 1% higher than just your primary residence, and the larger down payment is required if you are buying an investment property. So if you are looking to purchase and you don't know where to begin, you should always speak to your lender, get pre-qualified or pre-approved. I'm always happy to speak with anybody. There's no charge to get pre-approved. And then you would work with a realtor to help you find your property. So that our presentation was so short today, Shannon. Anybody have, we could go around the room and see what everybody learned. I know we had a few latecomers. So if there's any questions that you guys have, we'd love to answer those now.